Good morning. It's Market Day Report. As we get started today, we have a few reports coming out from USDA Food Price Outlook that comes out today. We get a cold storage report, poultry slaughter today. Tomorrow, we'll have in the morning a weekly export sales report, plus a quarterly hogs and pigs. Get a slaughter report tomorrow, and then Friday, ag prices. The big report set to come out on Monday. We'll get a quarterly grain stocks and an annual acreage report from USDA. All right, let's look at how markets have been trading in the overnight session. We'll start with the corn market first. In the red, down 4 on the old crop, new crop 3.5 lower, 425.5. And then soybeans. Soybeans are still in positive territory for the year. If you look at year to date, corn is down 10%. Soybeans, though, are up 3.25, though we were lower across the board in the overnight session. Wheat market, July contract, Chicago down 3, 532.75. Hard red down 4, 530.75. The wheat market has lost 3.4% year to date. Spring wheat contracts, December, quarter-cent higher, 660.25 in the overnight session. Finally, cotton up 27, 68.06. Let's go to Springfield, Missouri. President, Midwest Market Solutions is Brian Hoops. Brian, yesterday, a flash sale reported for corn from Mexico. It was huge, but we didn't see anything today.
We didn't, and that sale really didn't help us out too much. I think it, initially it kind of gave us a little bit of a buying support, but by the midday weather forecast, that support had given way, and we were falling to the lowest level since November. There's a cluster of support around for the 428 area for that December contract, and we're below it here in the overnight. We continue to slide lower here. All these grains are sliding. Wheat is having a tough time as well. That's putting a little more pressure against corn and beans. Harvest is really ramping up, but I've talked with a lot of producers who are still holding last year's crop in the bins, moving that crop right now, selling it on the open market. So it's not even this year's crop that they're harvesting that's putting a lot of harvest pressure. It's next year's crop that is starting to give us even more pressure. Last year's crop, because it's hitting the market out of these bins. They just need that bin space. So it's a tough go here for the wheat market. It's spilled over to corn and soybeans. It's going to continue to be tough as we look ahead because of the weather forecast. We go out into the 4th of July holiday. A lot of times the market sees that as a turning point, and there's not much threat of real threatening weather. It's a lot of rain, a lot of good growing conditions, kind of a greenhouse effect that seems to be weighing on these grain markets here as we go into the summer months and really start looking ahead to Monday's quarterly stocks and planning intentions or planning acreage report.
We're talking with Brian Hoops. We'll take a break, be back in a moment with more Market Day Report. 14.3%. That's year-to-date gain for live cattle futures. And in the session yesterday, it was a mixed day. That June contract expires on Monday, 221.55, down 75. August finding a little bit of strength, up 3 dimes, 209.67, then 207s for October, December, and February. We don't trade livestock in the overnight session, so these are settlements from yesterday. August feeders, 72 lower, 302.07, and then over to the hog market and the July contract off $1.42. August, 110.77, down to 27. We'll learn more about what's happening in the hog market a little later this morning, but let's bring back in Brian Hoops, Midwest Market Solutions, and this whole livestock sector kind of up, down, up, down, up, down. What's happening?
Yeah, it's been a real jerky type trade here in the cattle market here recently. The fundamentals really getting stretched out in here, and prices are just not sure which direction to go. Technical's a little soft in cattle, but yet the fundamentals are really strong. It looks to me like the cash trade could be steady to higher this week. It may be a little late in developing, but I think we're going to see that stronger cash trade once it develops. Now, last week we saw softer cash trade, but much higher cutout values, and that has restored the Packer margins. They were a little bit negative yesterday. This morning they're in the positive, $18 ahead on the good side. So that leaves the Packers some margin to work with here this week. They want to buy it at steady money. They may have to pay up for it, and they certainly have the ammunition to do so if they desire to. So they may increase these kills a little bit here, work with some of this positive margin, and kill a few more cattle, meaning they're going to have to buy some cattle contracts. Tomorrow we have or this afternoon we have cold storage report. Tomorrow we have quarterly hog and pig reports. So that will definitely affect how the hog markets trade over the next several days. Hog weights that were out this morning were down to about 285.3 pounds. So a good pound and a half from last week and about 2 pounds less than a year ago. That's a positive for this hog market, and the index and the futures markets between the August contract getting pretty close to aligning. I think the futures have gotten a little bit rich over the index. July and August much higher than where the cash markets were, and they're much better and aligned after a pullback yesterday in the values.
Yeah, and the cutout's up $16.81 over the past 3 weeks. Finally here, how about crude? Talk about volatility. This has been a really volatile market.
Yeah, no shortage of volatility there. From Sunday's highs to Tuesday's lows, about a $13 swing. So I don't think it should be surprising that we're seeing a little bit of a bounce here this morning. And I don't know that have extracted all of the war premium yet, but I think we get closer to $63. We've probably pulled all of this war premium out of it. We're still keeping a little bit in there because there is some uncertainty and some of this unrest. But as time goes on, I would look for more of that premium to be sucked out of those futures contracts.
Yep, good points there. Brian Hoops, President, Midwest Market Solutions.